Welcome to Mastermind Minutes, the podcast that focuses on the franchise industry. We'll cover topics that are important to franchisees as well as franchisors and share interesting insights that will help you build your business. We have one guest, we ask one question, and we do this in minutes, not hours. Good morning and hello again. My name is Gary Occhiogrosso and welcome to Mastermind Minutes. I am the founder of Franchise Growth Solutions, as well as the publisher of FranchiseMoneymaker.com. And Mastermind Minutes is a very simple concept. We have one guest, we ask one question, and we get one expert answer. We typically like to do this in minutes, not hours. And while we realize that's not a lot of time, that's okay, because at the end of the program, we will give you the contact information for our guest, and you can feel free to reach out to him and ask questions or do a follow-up. And today, my guest is Michael Esposito, and he's the co-managing partner for Franchise Equity Partners. Now, prior to founding FEP, I'll just say it that way, Mike spent 28 years at Goldman Sachs in investment banking and was a partner there for 20 years. He ran the Global Financial Institutions Group in the Investment Banking Division. He also served as the co-chairman of the Firm-Wide Commitments Committee, which underwrites all equity transactions, co-chair of the IBD's Client and Business Standards Committee. He's also a member of the Partnership Committee and a member of IBD's Executive Committee. So a storied background there, which we'll learn about more in just a minute. He is also a member of the Board of Trustees at the Hospital for Special Surgery. That's New York Presbyterian Hospital. Well, they may not be connected. I'll ask you to define that for me. Woods Hole's Oceanographic Institution and the Inner City Scholarship Fund in New York City. Mike is a graduate of Brown University and Harvard Business School. Mike, thank you for being with us today. Sorry, I butchered your background a little bit there. But before we get into the question, maybe you could tell us a little bit more about yourself and your background and Franchise Equity Partners.
Sure. Well, thank you very much. As you said, I was at Goldman Sachs most of my career, but later in my career, I started dabbling in franchising. And I actually own now 5 Jersey Mike stores up in Massachusetts, and it certainly gave me a taste of what's possible and really opened my eyes to what's a really attractive industry. And when I left Goldman in 2020, I very quickly got on to this idea of building out a franchise investing platform. And I do that along with a fellow partner of mine, a fellow colleague from Goldman named Scott Romanoff. And so we launched the company in 2021. We've got $1 billion under management. And all we do is make investments in franchise businesses. And as we think about it broadly. So it's everything from restaurants, auto dealers, heavy equipment dealers like Caterpillar, John Deere, beverage distributors, beer distributors, non-alc distributors, and then other consumer business services, which is everything from Planet Fitness to residential services to many other verticals. We love these businesses. We've spent about half of our money so far, and we've made 10 investments across the franchising sectors.
That's absolutely tremendous. And I know the name Scott Romanoff. I've never had the pleasure of meeting him, but I do know the name. And I didn't realize that you were a franchisee of Jersey Mike's. I love the concept. I think they put out one of the better products in that category. We Franchise Growth Solutions, we handle mostly restaurant concepts, QSR concepts. So as my daughter tells me, I don't get tired working. I just go around, talk to people, and eat all day. And she's partially correct. All right, let's go into the question here. And I think it's interesting because your firm, you invest in franchisees. We've had lots of folks on here from private equity firms that focus on the franchisor. Just recently, we had Alicia Miller on, who wrote Big Money in Franchising. I'm not sure if you know Alicia, but there is probably the last 15 years or so, this tremendous movement in PE firms investing in franchisors, or ZORs, as I say. There's not a lot of people out there or firms out there investing in franchisees. So it's kind of interesting why, the franchise sector, and specifically multi-unit, that's what I see, multi-unit operators have been appealing to the private equity sector for investment. So maybe you can help us understand that.
Yeah, so you're 100% right, which is a lot of private equity is very focused on franchisors and owning of brands. And we focus distinctly on franchisees. And we do that because we think they're very attractive. Um, they're attractive for a lot of the same reasons why franchisors are attractive, but I want to come back to a couple of important distinctions. Clearly they're all affiliated with these iconic brands that are owned by the franchisors, well-known household brands. And this is the more, quite frankly, more capital intensive part of the business. Franchisors are known for being capital light. They basically got a brand and they put it on the back of the franchisees to spend the capital to build out the systems. So why is that attractive? Well, I think it's attractive for a number of reasons. First off, and maybe most importantly, these companies are much cheaper on a multiple basis than what the franchisors would trade at. So, depending on the concept, if you look at franchisors, they can trade at 20 plus times earnings. Here, franchisors tend to trade at 5 to 10 times. So it's a very, very different price point. And we like it because it's an extremely consistent, recession-resistant, attractive cash-on-cash return business. And so it doesn't have much volatility depending on the specific concept. And it's got great cash-on-cash returns because at that multiple, the returns on your money are quite strong. And it's following a playbook. You execute according to a playbook, and so you don't have to worry about massive variance in business models between different operators within a similar system. And then the final thing is because there isn't as much private equity, we find that we can be a financing solution of choice for the owners of these businesses. And the owners of these businesses oftentimes are families. And a lot of what we see across our franchise platform is family-owned businesses, and it's a great sector of the economy with these family-owned businesses where the operators themselves have a lot of skin in the game. And so all of those things for us makes it really attractive to be investing in this part of the industry. I'd finally just say one last thing, which is of all the verticals we focus on in the franchising world, I would say the restaurant space, the quick service restaurant space, is where there is more private equity in franchisees than any of the other verticals, but still relative to many other sectors of the economy, we feel like it's underpenetrated.
Yeah, I agree with everything you said. It's definitely underpenetrated, especially on the franchisee side. I mean, I don't want to make it sound like you're the only hot dog vendor in Yankee Stadium, but clearly the competitive piece on that side, there are far fewer private equity firms looking at franchisees, and even the mature franchisors that we see today who are becoming strategic as well as financial partners with emerging brands, they're all looking on the Zor side. And, one of the things, because we deal primarily with franchisors, so one of the things that we tell our clients is, the multiples at exit can be tremendous. And that really is the driving factor for a lot of folks to actually franchise their business, as well as legacy and, being sort of asset light and the capital requirements being a lot less. But on the franchisee side, it's interesting to me that the multiples are that much smaller, but yet the cash on cash return and your ability to invest in those operators. And I'm assuming, correct me if I'm wrong, you're talking about your investment, you're dealing with multi-unit, perhaps multi-unit, multi-brand, what I refer to as professional franchisees. There's a gentleman I know, a guy named Jesse Kaiser. He's a professional franchisee. This is what he does. So what's the benefits? I mean, I understand the benefits on your side of the table. What's the benefits to the multi-unit operator in partnering with a company such as yours?
Yeah. So there's obviously cash and capital. And what we've found across all of our verticals, these are consolidating industries. And it's like anything else. You either grow and you buy and you consolidate, or you wither. And so in a consolidating industry, we find that these owners need capital at some point. We also find that because they're oftentimes family-owned businesses, there's oftentimes, as the money gets passed down through the generations, there's oftentimes disinterested shareholders. And so there might be a brother, sister, niece, nephew, uncle, whatever it may be, who's no longer active in the business and needs to get cashed out. And so, and then finally, people may just want to take money off the table. People have a highly concentrated bet in this family-owned business, and they can get an investor to take some money off the table and get some diversity. So first and foremost, the primary use of capital, therefore, is growth, shareholder consolidation, and diversification. But then I think the other big thing is a really good firm, partner firm, can add a lot of value. And like in our case, we have, for example, a data science effort. And we do a lot of data analytics around how to improve operations. An example would be pricing strategies. And so one of the things we observe is that there tends not to be national pricing. It tends to vary market by market. And as a franchisee, you want to be on the leading edge of that, but you don't want to be too high. And so we do a lot of web scraping and looking at how different franchisees are pricing to make pricing recommendations. We look at the effectiveness of marketing programs, whether it be coupons, whether it be other types of promotional activity, buy one, get one free kinds of things. We look at that. And we've got, again, a data analytic team that looks at that. We also have a capital markets effort. And so when somebody wants to borrow money, we've got a team that can help execute that. And they've got a lot of experience in working with banks to get best-in-class terms for the franchisees that we're involved in. So I think there's clearly the money aspect of it, and the money aspect can serve in different purposes in terms of what an owner might want. But then hopefully that's a bit of a commodity. What you really want to do is find somebody that can add value along dimensions that maybe are complementary to you as a great owner operator.
Yeah, I hear you, and I love that. It's interesting because we have these consultations with our clients, again, franchisors, all the time. And I sort of break it down this way. Hey, you have two people standing in front of you. One is just a strict PE firm, and they're going to write you a check. And the other is more of a strategic partner. They'll write you a check. Maybe it's not as big a check. They'll write you a check, but they can bring assets to the table, things like real estate, or you mentioned marketing, that are going to help you grow your company. Our recommendation is you go with the strategic partnership because those other assets are invaluable. And, I don't want to say anyone can write a check, but I guess, in sort of a way, anybody can write a check. So I agree with you 100% in that respect. What is what's sort of the sweet spot that you guys look for in a franchise, a multi-brand or multi-unit franchisee? Where do they need to be in their evolution for you to have some level of interest?
Yeah, so first off, we spend a lot of time looking at the brand, the franchisor. Depending on the specific industry, in restaurants, for example, we like to say that probably 75% of the outcome is on the brand. We call it beta. And so we spend a lot of time looking at the brand and the brand. We call it brand momentum. And we think about things like same-store sales growth, particularly transaction growth, ability to take price. We think a lot about the customer demographic. So, for example, we've found that Gen Z customers are driving much more of the growth. And so we find that brands that are associated with that are going to have likely higher growth. We think about brands that are really digitally enabled and delivery enabled, and that works well in that channel, just given us, again, the size of the growth. And so we spend a lot of time. And if you look at almost every one of the major food categories, pizza, burgers, chicken, et cetera, there tends to be one dominant brand, Chick-fil-A, Domino's, McDonald's. There tends to be a handful of legacy brands, Burger King, KFC, Pizza Hut. And then there tends to be the emerging new entrants. And so when you think about it that way, each of those different categories of players, dominant brand, legacy tier one, and emerging, have very different growth characteristics. So we spend a lot of time looking at that and as a starting point. Secondly, we're very focused on the owner operator. We actually don't want to invest in turnaround situations. They can be great for certain people, but that's not what we do. We like really good owner operators, and we like scaled operators. So in the restaurant space, we're generally looking for operators that probably have north of 75 stores, probably north of 100 stores, to make it interesting and make the equity check big enough. The only other thing that's unique about us and very different than typical private equity is that we also do minority stake investing. And so unlike traditional private equity, we don't seek to have control. And so we're looking at places where we can invest 20 to 40% of the company and keep the owner operator in control. We're relatively passive. And the idea is the owner operator has a lot of skin in the game, a lot more skin in the game than we do, and we're not operators. And so that's why I say we're looking for great brands, great operators who just need some capital to get the business to the next stage.
That's interesting that you're willing to make the investment and not take control. That might actually make you the only hot dog vendor in the Yankee Stadium. Okay, I'm not sure, but that's interesting. But I would attribute that, and again, tell me if I'm wrong, to the fact that, first of all, you're a franchisee, you thoroughly investigate the ZOR. I can tell you right now in our portfolio, no names named, we have a company in our portfolio where the franchisees are doing gangbusters, but the company is in complete disarray. It's undergoing some transitions there. Now, we took it on as a client because we believe in the brand and we know they'll straighten it out. But I would say if I was going to put money in, maybe I'd be a little bit nervous about it. But I would have to say that because you investigate the ZOR as well as the Z, you feel confident that if you leave control to the management team that's there, that you'll make the investment. So I think that is, I don't know I haven't heard of anyone else doing that. Usually everybody wants majority.
That's unique.
Yeah, that is a terrific point of differentiation that, as I said, I haven't heard of in the franchise world. What is the exit strategy for your company? Like, again, I remember our thing was you buy it, you built it, and you flipped it, whether that was a 5-year plan, 6-year, for whatever. What's your exit strategy on these things?
Yeah, so we don't have one, which is the third thing the third thing that's unique about us. We call our model minority, passive, and permanent. Minority, passive, and permanent. I talked about the minority piece. I talked about the passive piece. The third piece is permanent. So we're happy to stay in a brand and in a franchisee for a very, very long period of time. It's our mentality. It's the way our fund is constructed. And we've done that in part because we want to be attractive to the franchisee, the seller of the equity. Quite frankly, we've also done it because we want to be attractive to the franchisor. And what we've noticed in a lot of the verticals that we play in, there is no private equity at all. And so I did mention there's private equity at quick service restaurants. There's really no private equity in auto dealers, in beer distributors, in Coca-Cola distributors. And the reason is the brands don't want private equity in it, and they don't want their businesses to be flipped every 5 years. And so we constructed this capital that allowed us to get into these systems and make ourselves attractive to the franchisees, but also the franchisors where there's no other private equity.
Yeah, that's unique because what that tells me is your model is based not only on creating equity and appreciation on the investment, but also it's a cash flow model.
Yes.
Which obviously, you can build that up and have that residual forever, really, if you think about it. I think it's truly unique. I haven't heard of anything sort of what you're doing at all. So I love innovation. I love people that, sometimes people say, well, I'm out of the box. You know what? I don't care about that. I like people that don't even have a box. And it sounds that this is a unique format. What last thoughts can you leave us with here so that the audience can at least, have some level of intrigue and may want to contact you?
We do think the minority passive permanent approach is truly unique. We don't, quite frankly, see any competitors. And so for somebody who wants that type of investment, we're very eager and always interested in meeting people. I would say the only other thing I might leave people with is, it's a two-way process. It's a two-way interview, if you will. Again, I think the capital piece of this is a commodity. Plenty of people in the world have cash. And while our investment philosophy of minority, passive, and permanent may be unique, there are plenty of people that can provide owners cash. So I think it's a two-way interview, and it's really important. From our perspective, particularly in our model, we're a minority, we're passive. And so we're about to hand over an owner a lot of cash, and we're not going to have much control on it. So for us, it's really important that we find partners that we like, we trust, we respect. But conversely, the owner should feel the same way. And really understand who you're dealing with, who's across the table, get to know them. What we always find is from the time we meet somebody, it could take a year before we make an investment. And we're deal people, so we can get a deal done in 2 or 3 weeks. But what we find is because it is this two-way interview process, and because the family typically hasn't had an outside investor before, we find that it takes some time to do. And I would really encourage that. We embrace that. We like to spend a lot of time getting to know people, meals and getting to know people before we make an investment. And we find it's best when they do the same.
Yeah, and I'm with you on that, because it is about the energy and the people and the integrity of the overall agreement or arrangement, you know. So, folks, we've been speaking with Michael Esposito, who is the co-managing partner for Franchise Equity Partners. Michael, if somebody wants to get in touch with you, what's the best way to do that?
Sure, you can always reach out to me via my email, mike.esposito, ESPOSITO, at fep-us.com.
Okay, great. And we will embed that into the bio in the podcast. Well, thank you very much for being with us today. An interesting topic, a unique topic for sure. And we appreciate the insights you've shared with the audience today.
Thank you very much.